Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about mortgage rates over 5%, Uber's proposed Superapp, and what's going on with Black Rifle Coffee Company stock. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The mortgage rate on a 30-year fixed mortgage just topped 5%. What effects will this have on the housing market?
Well, good morning, Allison. Thank you for that intro. And also just a quick shout out. Tonight's our investment advisory board meeting tonight at 7:30 here Central Time. So you're going to receive, in addition to this email today, you also receive the Zoom link and instructions as well for tonight. So please come out and join us. We'll talk about what happened in quarter one, what's going on with quarter two, and my forecast for the rest of the year. But back to Allison's question. So you can kind of see from, excuse me, the futures here. Market got hit hard yesterday. Market's going to getting hit hard today, predominantly because of the interest rate scenario with the Federal Reserve, which again then parlays over into Allison's question, which is mortgage rates. So peeling that back a little bit, every 6 weeks the Federal Reserve meets, and then they're forecast at every meeting this year they're going to raise interest rates a quarter point for a total of 7 times, leading to almost 2% by the end of 2022. However, in between those, every 3 weeks, or in between the 6 weeks, at the 3-week point, so halfway between the meetings, that's when the Federal Reserve releases the minutes of the meeting. So instead of just releasing the announcement at the end of the meeting, 3 weeks later, which is today, this afternoon, 2 p.m. Eastern time, is when the Federal Reserve is going to release their minutes for that meeting. And that's when you can see how everybody voted, how many people were talking about, either half a point raise, or how many people were talking about no raises. You can really see the internal dialogue of the Federal Reserve at that point. So you have the market selling off in anticipation that there's going to be a lot of negativity in that, meaning more hawkish tone, meaning that the Federal Reserve wanted to there's members that wanted to raise more than a quarter point. So we'll see what that says today. I think the market stays down until we read those minutes, and then we'll go from there. So back to the question of mortgage rates. 5%, that we haven't seen that in, we saw it briefly in 2018. I found an article on Market Insider that, here's the rate hit 5.02%. Again, this is the 30-year fixed rate, which is what most people use. That's going to, the fact that the 30-year rate is going back to 5% may actually bring ARMs back into the conversation, the adjustable rate mortgage, which has been, a fool's move for forever, right? Because you could lock in such a low rate in the 30-year or 15-year fixed if that's what you want to do. But yeah, so we're back to what I would call more normalized interest rates. So again, the Fed moved the short-term interest rate a quarter point, and the mortgage market adjusted all the way from 3% to 5%. So again, the mortgage market, that's supply and demand versus, the Fed setting it. So just imagine where the mortgage rate could go if the Federal Reserve continues to raise 7 times this year. Are we going to look at, 8, 9, 10% mortgage rates? I don't think that's going to happen. I think the Fed would roll over and stop their increasing if that actually started to get close to that. But how does this affect you and me? Well, if you're a current homeowner, the value of your house will likely drop a little bit. The housing market's been on fire, but that means it's less affordability for somebody to buy it from you, right? And when they go through their ratios and calculating payments, obviously they're paying more interest. So therefore, it's going to be a little bit less affordable to others out there. However, is it really going to slow the market down in hot areas? No. It's just like overall, there's going to be a headwind due to this. But certainly if you live in an area that's on fire, in my opinion, I think that's going to continue. So that's where we are, 5% interest rates. The whole, if you haven't refied during the 10 years, you had to kind of get your mortgage rate down to 3%. And I think that ship has probably sailed for good. But you never know. But if you have not done it, now's not the time to do it. And there was folks for several years refining cash out of their house to put it into the stock market. And that's been a brilliant move. That's now that the numbers have changed, not going to be recommended strategy going forward. Some advisors still may recommend it, saying, well, if you can make 10 in the market and only have to pay 5, well, there's taxation, and it's a little fancier than it was. It was kind of a no-brainer when rates were at 3%, but now you get 30-year rate at 5%. It kind of changes the conversation. So in conclusion, not good. I think these are going to continue. The mortgage rates are going to continue to move higher throughout 2022, and we'll see where they land.
Next, Uber just proposed a super app that would be a one-stop shop for all your travel needs. Will this move the needle in UBER stock?
Well, I think that ultimately no, in my opinion, on the stock, but I'll come back to the stock here in a second. How cool is this? I will say, and I've said ever since I've been in business, you want to invest in companies that are changing the world. Well, first, it was a week or two ago when Uber brought in New York City, he said that it's bringing the taxi cab service into its app. So therefore, one-stop shop, you go in there, you could either get a taxi or an Uber. Taxis are, Uber rates fluctuate with supply and demand. I believe taxi rates are set by the city, that they're, so they can't gouge you at 3 a.m. when you really need a ride, to the airport or whatever it is. They're kind of set, right? I think it's by the city that determines those rates. So now you have, in low demand times, taxis would be, it'd be smarter to take an Uber, and in higher demand times, you may actually it will give you taxi as an option. And of course, Uber is going to get their cut through the app, through getting paid through the app. So I think that was a fantastic step. And now the second step of why not open it up to planes, trains, and rental cars. I found the planes thing kind of funny, but right now, it was probably 6 months ago when I had a client say, hey, have you ever used Google Flights? And I was like, no. He's like, well, yeah, that's the only thing you should ever use. So I was like, okay. I checked it out, and he was right? You just put Google Flights and it brings in, right now, if you go to like Travelocity or Expedia, it doesn't have the discounters. So it doesn't have Southwest, doesn't have Allegiant, Spirit, and some of the others out there. Google Flights does. It just brings in everything. So why not apply that to, Uber, to apply that to their app? It's just like, and if you haven't seen it already, we were just in Spokane, last weekend or 2 weekends ago. Time flies around here, but when you go to get an Uber, it also gives you the option to rent a little scooter. The little green things, or at least in Austin, they're green. I have not been on one. I'm a little leery. I'm over 50. I get it. I just acknowledge that. I don't really need to be on one of those, but everybody else can. Good for them. So it gives you an option, just like, hey, there's a scooter like right over here. You can have that and go. I was like, wow. Okay, that's pretty cool. So I think from a change the world perspective, yes, absolutely. I love this stuff. I love technology. I love how it brings it all to your fingertips. You have your smartphone, and that is literally your access to get everything done. But will it move the stock? Let's just peek at the stock real quick. I don't like it due to the razor thin margins. So I just don't see a huge profitability long-term in this, even though they're changing the world. So there's your 6-month chart, kind of a steady downturn. Go out to a year chart. Same thing. Did that update? Yes, it did. So, 5 years. Yeah, it came out way back when, 2019, peaked up at 60, down at 34. I don't know. I just don't see it. Not profitable, not a lot to like here in the stock. So I wouldn't pile into the stock just because of today's announcement.
Last, Black Rifle Coffee Company's stock has more than doubled since its IPO a few weeks ago. What's going on with this stock?
Okay, Black Rifle Coffee Company. It's coffee. So you have, high margin, low cost of goods there with the coffee beans. They fluctuate somewhat, but pretty much, low cost. They have a subscription service. That's a lot to love. They have the coolest swag out there. Again, it's kind of a military focused brand that really has pretty neat stuff. And it has, pretty significant political overtones. So there's kind of a political battle that goes in the stock as well. But let's look at the history. Here's the 3-month chart that I have pulled up. It was, I don't even remember anymore what it was a SPAC. So it didn't do a traditional IPO, but it did a special purpose acquisition company, which is the blank check company we've talked about, that bought Black Rifle and then switched their ticker. We were in it well before the switch. right? So these SPACs sit around $10. There was actually a drop right before it IPO'd because it kept getting delayed. So that's why finally there, people started like, okay, I can't take the pain. It's not going anywhere. It dropped down to, I think, 8 something. No, it said maybe 9 here. People got a good deal on it. And ever since then, you can see the move up has been pretty significant. Jumped up right to 19, almost 20, kind of settled in for a couple weeks, and now it's on its next move up. Did touch $29 here not too long ago. So what is the deal with something like Black Rifle? Well, it's kind of like the Bitcoin scenario, where there's people that love it and believe and want it. Those people are also not selling this stock. If you have it with me, you've seen me sell a few shares if you've had a sizable position at all. But once something doubles, you need to take a little bit off the table, right? You need to book some profits. Well, it almost doubled again. It almost hit close to, I had 30 was my next fence, and it didn't quite hit it, and settled down to 25. So wish I would have sold a little more at 28 or 29, but didn't get it. That's how it rolls. But really, when you look at, they're still too new, so I don't have a whole lot of the metrics that are out there. But I do want to show you this. That is a great news story. So you have the ratings, strong buy, and hold. All those are favorable, so that it's being covered. But the earnings projections, they're going to lose money basically through 2022, but they're going to be profitable in Q4, and that's attractive from an investment standpoint. So they're in growth phase right now. They're opening new stores. They have a couple in Texas. I do not think they have one in Austin yet. However, if they do achieve profitability, which largely you can do that by stopping your spending, right? Or reducing your spending, not stopping it. Achieve profitability, that's really when stocks take off, when you go from the losing money to making money, even if you're just hanging around that flat line. So then flat line for basically a year, and then starting to make significant money at the end of 2023. So lots to like about this stock. If you see me selling it in your portfolio, that's only because we've made so much money on it. But I do think it is still a long-term hold. It's tough to really pull the trigger and buy here, especially you shouldn't really be adding when it was at $10, not a month and a half ago or whatever. So I would say it's just a hold or trim based off of the gains we've had.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.